Welcome, welcome. I'm Keith. This is Crypto Bullseye, and this is a very important episode for you guys on how you can protect yourself in crypto before you wreck yourself in crypto. So I've got three key tips, three key steps for you. We're going to go through them step by step, so stay tuned right to the end. First and foremost, 4.59 thousand subscribers. I appreciate each and every single one of you. This is the reason why I'm doing this video. We can all protect each other in the crypto market in order to be successful in the crypto market. So three key ways and how you can protect yourself before you wreck yourself in the crypto market coming up. Stay tuned right to the end. Right, the first thing that you can do as far as protection is concerned is always use a stop loss. Always know where you're going to take profits. This is the key, guys. And if you're using stop losses and you're not putting in take profit areas, what's going to happen is price action is going to retrace. It's going to hit your stop and you're never going to have a take profit level. So it's all about taking money out of the market when the market gives us opportunities to do so. So let's go over a couple of examples. And I've got the Bitcoin chart up here. And you can see that we were talking about this 276-day major resistance level for such a long time on the channel, and we finally broke out. So we were having people long in this area, we were having people shorting in this area, and let's go through a couple of examples and a psychological reason why this actually happens. So we're in this range, we're expecting to short in this range. So people that are shorting in this range are having stop losses above the previous high. Why are they having stop losses above the previous high? Because it's protecting them. And price action's previously done this once, twice, 3 times, 4 times, 5 times. It's a high probability that that's going to act as resistance going forward. There's a high probability we were going to get a move to the downside, but the markets do whatever they want, and we're not right all of the time. We can only analyze the markets and tell us what previous price data tells us. So we would have had stop losses above there. Is that a bad thing? It's not a bad thing because that's a short stop loss. If you didn't have a stop loss, then you're looking, and this is for shorts. If you didn't have a stop loss, then you're looking at riding it up, and you'd be in a huge loss. If you're using futures, if you're using any kind of leverage, then you would have been liquidated at that point. So, right, okay, so stops at this level. Why does price surge? Lots of people have got stops at this level. There's all eyes on this, top of the range of this 276-day major resistance, and there's lots of people that did get stopped out on this. So what happens when lots of people get stopped out? Firstly, we talk about the bears becoming the bulls and the bulls becoming the bears. What happens here is they all get stopped out. Price surges to the upside. Price surges up to the upside because there's no sell orders left. And then you get this move. And what the buyers or what the sellers wanted to do is make a profit on the downside. Now what they're looking at doing is making a profit on the upside. The bears have become the bulls in this instance. So they're waiting for price action to come back and test this previous 276-day major resistance level as support. So this is going to be a strong support going forward. So if we pull back here, and we've got our trend line in, we're at our trend line, and that coincides with our 276-day major resistance level. There's a high probability that we're going to get a move to the upside there. What if we're wrong? Got a stop losses underneath here. It's not too drastic. If price surged to the downside and you didn't have your stop loss in, then that's one way of getting wrecked, guys. Stop losses, all they are is trading expenses. Let me emphasize that. So if you imagine you're opening a shop or you're opening a business, what you can do is you can have different assets and different liabilities. You might have stock, which costs money in order to make a profit. You need to treat your stop losses and you need to treat your trading losses as just a trading expense, an expense in the market. And all you're doing is you're protecting yourself from losing all of your capital. So let's go over a more recent example on Bitcoin. Stop losses allow for small losses. Use your risk management, and we'll talk about that a little bit later on. Right, okay, so we've got Bitcoin. It's dropped this range here. We're creating a flag pattern, a bit of a bull flag. We've dropped below this range. We've closed below this range. We've come back. We've retested it as resistance. And as far as the charts are concerned, it's showing there's a higher probability that we're going to make a move to the downside. Is this completely bearish for Bitcoin? If we do make a move to the downside, we're still within this trend. We're still making a series of higher lows. Just made a higher high here. So what would we be looking for in this instance? Let's have a look. So if you had a short position here, it allows you to have your stops when you know that you're wrong. If you've got your stops when you know that you're wrong, you're shooting for the bottom of here, then that allows for good risk management. You're only going to lose a small amount of your capital. So just an example, this risk to reward here is 4.24. So you can be right once and you can be wrong 4.24 times, and that would break even. If you get more than that, then you're profitable. If you do that over a period of time, you're consistently profitable. So it's all about protecting yourself. You might hit stop losses and you might hit stop losses. You might hit 3 or 4 in a row, but as long as they're small losses and you've got the good risk management, you can allow the winners to ride. So that's how you protect yourself for stop losses. That's why it's important. And your take profits are just as important, guys. So you should always know where your take profits are before you even take the trade. So let's get on to the next step. The next step we're going to talk about is risk management. And what we're going to do is we're just going to ride the Bitcoin market down. If we used a dollar cost average strategy from November 2021 until where we are now, we could be buying, say, once a week. So you'd be buying here, 53,000. You could be buying here at 46,000. What you're doing is you're bringing your average down. Is that a good thing? It's always good to bring your average down. However, is it better to build your average down once we've created a strong base? So this is from an investing perspective. And like I say, if you're dollar cost averaging these levels, you're getting some low levels, you're getting some high levels, but you're in a downtrend and you're continuing this downtrend all the way down. So your average over a period of time from here to here, as an example, let's have a look. We can just stick a Fibonacci retracement tool on the top to the bottom. If you were dollar cost averaging over a period of time there, the 50% level, your entry price would be 42,367. So it doesn't sound too appealing when we were looking at levels of 15,000 and now we're at levels of 29,000. So how can you take advantage of this? Because you know macro, you're in a bear market. If you're looking at a dollar cost average over a period of time and allocating small amounts of your portfolio, it makes more sense allocating small amounts of your portfolio when you've created a base and you've created a range. And let me show you exactly what I mean here. This range here has held for this range here has held for 444 days. So quite a long time. If you were dollar cost averaging into these areas from an investment perspective, this is applying appropriate risk management from an investment perspective. You're getting at these levels, you're getting at these levels, you're getting at these levels, you're getting at these levels. And overall, just stick a Fibonacci on there, you're going to get an average price, top to bottom of this range, average price of about 24,000. So by doing that and waiting and having patience, you get to have that lower entry. So it could still continue in this range. It could pull back to the downside. If we break above this range, it'll be short-term bullish for Bitcoin. So that's how you can dollar cost average, and that's how you can apply the appropriate risk management at lower levels rather than higher levels. If you're talking about altcoins, this is Bitcoin as an example. Bitcoin doesn't bleed as much as the altcoins. So this is a conservative example. If you were doing it with altcoins, some of them are 98% down. So if you were averaging down on an altcoin, then that's a really risky move. Once you've started creating a base here, it's good. If it pops down, it gives you an opportunity to get a lower level, but you know that the downside isn't as bad as what the upside is. So that's what I look out for in it from an investment perspective, and don't put all your eggs in one basket. Small allocation of your portfolio. Just an example, if you had $1,000, you'd be putting small amounts in, you'd be putting $50 in at low levels of support, and then carrying on 50 levels at low levels of support, carry on at 50%, £50 at low levels of support, and make sure you don't eat your capital, because what that allows you to do is, if we break down, you get to stick those $50 in your lower levels here. So that's what I do from an investment perspective. That's just a simple way that you can look after your capital from an investment perspective. From a trading perspective, let's go over that quickly now. Trading perspective, let's just go and find a trade here. Bring this back up. This is what we were looking at earlier. So you got your trend line, whack in the trend line, got your trend line here. So if price pulled back here And we're at this level of decision. The tug of war starts between the bulls and the bears here. Who's going to win? Who's going to gain momentum? There's certain ways that we talk about in this channel, how you know where you can gain momentum. And one of them is a higher high, higher close candle, a pin bar candle, or whatever other reversal pattern, 3-bar reversal. We can talk more about candle patterns. Let me know in the comments below if you want to talk about individual candle patterns and how they can give you an edge. So how do we apply the appropriate risk management here? Taking a trade. You've got some guy on YouTube, just give me as an example, saying, right, okay, potentially we've got a long here. What I'm doing is I'm applying the appropriate risk management. So if I had a long here and I was having a stop there, and I've got my take profits there, similar to our previous one, would I apply a lot of my capital within my trading portfolio? I'd be applying about 5% maximum of my capital of my trading portfolio. What happens if I lose the 5%? Then the next stop loss would be a maximum of 5%. So it's not going to be the same amount. It's going to be less because my trading account's less. And by using percentages, that gives you a huge, huge edge in the market because it helps preserve capital over a longer period of time. You're using a percentage. If you continue on a down streak, you're just using percentages, which would be less each time. And then it's the same for the upside as well. So if your balance is increasing, your percentages are higher, the amounts on your trade are higher, and that's the ultimate goal that we're working towards. Okay, guys, hope you found that useful. Remember, risk management is the key. Protect yourself, preserve your capital, because if you don't preserve your capital, you can't take advantage of the gain. So hope you found the video useful. Like I say, don't have to subscribe, but watch 3 of my videos from my YouTube channel. We'll leave the link in the description below, and you can decide yourself after those 3 videos. Do you want to continue watching it? Do you find benefit from me? Let me know in the comments below, guys. Take care of yourself. Bye from me.